For the past several months, Trump has been constantly bringing up the topic of negative interest rates and that the US should use them. He has stated the Federal Reserve should get our interest rates down to zero or less, and that he could get used to negative interest rates. The recent situation has only prompted him to push for it even more. So what even are negative interest rates, and why does Trump insist on them? Well, negative interest rates are when the central bank or the Federal Reserve pays banks and institutions interest to borrow money. Similarly, they charge banks and institutions interest to hold their money. This will slowly go down the ladder to consumers, who will also be charged interest for keeping money in a savings account, while they can borrow money for really low interest rates, possibly even be paid to borrow money. But how could this be beneficial to anyone? Banks can't even make money on giving out loans, and the average person loses money by simply holding their money in a savings account. Well, first of all, this will lead to a higher GDP. GDP is calculated by adding together consumer spending, investing, government expenditure, and net exports. When people and institutions are being charged to simply hold their money, they're much more likely to spend the money to avoid being charged interest. The brightest will invest in real estate, stocks, bonds, and so on and so forth, while others will simply blow the money and use negative interest rates as an excuse. But either way, this will increase consumer spending and investing, thus increasing national GDP. Furthermore, when companies invest into new products and open up new manufacturing plants, this will create more jobs, leading to more people making more money. This creates positive feedback loops in which people make more money and then spend more money. And throughout all of this, the government will also be pulling in more revenue from the spending and investing going on. This includes increased sales tax revenue, capital gains tax, property tax, and so on and so forth. Thus, negative interest rates will increase consumer spending, investments, and government spending, which will in turn inflate the national GDP. Moving on, negative interest rates will also encourage people to take out more loans, which if used right can lead to more prosperity. For instance, a person looking to take advantage of this opportunity may buy their first house or another rental property. Or maybe they take the leap and open up a local business. Following up, negative interest rates give a country an export advantage. When a country implements negative interest rates, the currency becomes less favorable on the foreign exchange market, thus causing the currency to lose value. This would increase exports as US goods would be comparatively cheaper to foreign countries. At the same time, foreign goods would be comparatively more expensive to US residents, thus decreasing imports. This combination will increase the net exports of a country and again help the country's GDP. So essentially, negative interest rates stimulate market activity to inflate GDP, and this is especially useful in a recession. A side benefit is that this creates a golden opportunity for many investors. However, there are many risks to be aware of as well. Starting off, banks will be less motivated to lend out money as they won't make much interest from them anyways. They will continue to give out money as long as interest rates for borrowing are positive, but when they're only making 1% interest, they tend to lend only to safer individuals. For instance, they might increase their credit and down payment requirements because the returns are simply not worth lending to risky individuals. As a result, this will actually decrease the amount of people that can benefit from low borrowing rates. Also, this could lead to a concentration of capital under larger banks who can afford to charge less interest. Thousands of smaller banks could collapse due to funds in their reserves drying up. Furthermore, this could lead to large-scale liquidity concerns for all financial institutions. When everyone is trying to withdraw money either to spend, invest, or stash under their mattress, and everyone is trying to take out loans, banks will have trouble funding all of these activities. And if too many people withdraw their money, this would result in a banking panic, leading to an even worse economic situation. A solution to this issue would be to only charge negative interest on funds that exceed a certain amount, and continue giving positive interest for funds under that amount. This will prevent people who don't have much money to start with from spending the little money they have. The negative interest will only affect people who have several hundred thousands of dollars in savings accounts who really should be investing all of that excess money anyways. As a result, if negative interest rates are implemented in moderation, it should affect the economy in a positive way, as this is not just some crazy plan Trump thought of over the weekend. Negative interest rates have been implemented around the world, starting in Switzerland. The Swiss first implemented negative interest rates during the 2008 financial recession, And if you take a look at their GDP graph, it's as if a recession never even happened, as the dip is small enough to be explained by natural variation. Since then, Switzerland has made it a habit to implement negative interest rates whenever the economy is on a downturn. And as Switzerland has one of the strongest, if not the strongest economy in the world, this practice of using negative interest rates has caught on across the world. And this is where President Trump got the idea to implement negative interest rates in the US. But one thing to remember is that all the countries in which negative interest rates have been successful have small, homogeneous populations. For a country as big and diverse as the US, negative interest rates may cause more harm than good. But we can't tell unless we try. If you guys thought this video provided a good analysis of the pros and cons of negative interest rates, then make sure to drop a like, and consider subscribing to see more questions logically answered. But until then, I'm Hari, and I'll see you guys on the next one.